And we are live. Roy, how's it going? My favorite day of the week.
Oh man, yeah, I love this. And there's so much news today, guys. Like I always say that, but like I don't know. Like this bull cycle, this bull market is just wild, and there's so much that we can only begin to cover. One of the things we're not going to cover tonight is Nvidia, unless people ask about it in the comments. At the end, we'll try to take questions and answers like normal. But yeah, for sure, Bitcoin. There's a lot of Bitcoin stuff, Tesla and Elon Musk stuff, hymns as well. There's some good stuff there, and whatever else Tevis wants to talk about, and you guys as well.
Yes. I will go to our DMs and just look at all the links we share back and forth.
I've got a bunch of them pulled up, brother. So, how are you doing?
I am doing well. Have a massive freaking headache, but you know what's going to help with that is this bad boy right here. Yes.
Is that a normal size or is that big?
This is just a normal size. I don't like.
I guess your hands got smaller. You have Donald Trump hands or something. No, I'm just kidding.
I don't know.
Yeah.
Oh, look! Listen to that sound. That's my first Celsius of the day. I save them for these shows. I don't drink them at all, and I only save them for the shows. Unlike what many people may think that I drink like 10 of these a day, I do not. I limit myself to 1 or 2 a day max.
Mm-hmm.
Yes, diamond hands.
There you go.
Okay,
so
let's do it.
I'll let you pick Bitcoin, hymns, or Tesla/Elon.
Let's get the Bitcoin news out of the way first of all, and then
out of the way, the boring Bitcoin news, right?
Yes,
dude. Yeah. There's so much stuff tonight. So yeah, Bitcoin, a lot of things. This week we of course hit. Let me refresh it too, just in case. Oh wow, straight down. Just kidding. It hit a new all-time high, and yeah, that's great. As Bitcoin holder, this is one of my 2 DCAs this year. I've actually increased my DCA slightly, so it's 1% of my income. I've been deploying in Bitcoin for a while now. I just realized like, hey, I don't have enough. And this week, Bitcoin conference is happening. There's a lot of people presenting there. Vlad, specifically mentioned that he was going on there. I hadn't had time to watch that interview at all, but he likes Bitcoin, so it makes sense. And one of those announcements that was coming out too is this. So XYZ Block, Jack Dorsey's company, they announced that Bitcoin checkout is going live in Vegas and that they'll actually scale it out to all eligible merchants by 2026. All this is basically you can pay by Bitcoin directly now.
Very cool. That's very cool.
It's kind of cool, but like what makes me really upset
that it's Block.
Well, no, not that it's Block. I'm a shareholder. I own
wow.
like $50 worth. So let's pump that $50. Help Steve's terrible gift after I gave him the blessing of Robinhood be better. But what upsets me is PayPal does this already. Gets no fanfare. You can pay with crypto directly. You've been able to do that for a long time. It's easy. It's automatically converted to whatever currency you prefer, usually US dollars for the merchant. You don't have to worry about the price going up or down. And nobody cares. Block does it. They're like, wow, this is amazing. And it's like, come on.
So, yeah.
But yeah, this isn't really like a huge deal. But I mean, it's honestly, Bitcoin is not positioned that well as an actual implement for this kind of cells. It's nice that it can be used, but crypto and large is going that direction too. And the last piece of Bitcoin news, although anything else you want to cover is fine.
So, yeah, this is what I want to talk about.
All right, so go ahead.
No, lay it up, and then we can discuss.
Trump Media, this is DJT, ticker symbol, to buy $2.5 billion in crypto to create a Bitcoin treasury. And of course, this also coincides the United States, weighing the Genius Bill, I believe it's called, for stable coins, crypto, U.S. Reserve, and a lot of different stuff that's related to crypto as well. So, yeah, what's your thoughts?
I think it's really cool. But again, I'm going to be biased in my thoughts because I own Bitcoin. I think both of us are going to be biased in our thoughts because we both own Bitcoin. And it's just really, encouraging to see the scale of adoption where you have like the president who's like buying it in his own company, and then you're going to have multiple nation states adopt it in their own treasuries as well. Companies are putting it in their treasuries, and it's very much legitimized, and it gets more so every single year. And I also saw this other piece of Bitcoin news that like one massive shorter had just closed his Bitcoin short position. Did you see this? Did I send this to you? Uh,
No.
Bears and the large, famous Bitcoin shorts, more and more of them are capitulating every year. And it's the narrative is changing from previously it was like, oh, well, this is a massive Ponzi to, this is never going to reach worldwide adoption. It's kind of like a little hobby side project to so on and so forth. And now everybody sort of agrees. Well, the most amount of people that have ever agreed on Bitcoin agree this year than relative to 5 years ago, let's say. It's convinced more and more people. And now the conversation has changed. It's become less around like, oh, this is a fad to, well, it's never going to reach that size. And so it's a question of scale. It's a question of magnitude as opposed to a question of legitimacy. And I think events like this help reinforce that on a consistent basis, especially when it comes from nation states. So it's very encouraging to see. Again, when you follow Bitcoin, the frequency of these events is so incredibly, it happens all the time. But that's also encouraging to see.
Yeah. Throw this up real quick, Tevis. This is a very scientific, accurate poll. Maybe not, but I was curious because, I'd mentioned that I was DCAing. I've mentioned a number of times that people are more interested in starting that all-time highs. Case in point, Nate in the comments doing 2% of his income now. And Gurjap, if I'm mispronouncing it, man, tell me how to pronounce it right so I can get it right. But he's also started it today too. But yeah, I ran this poll. 50%, nearly 50% said, yeah, Bitcoin's legit. 25% said, yeah, maybe. Like, I think it's probably legit, but not sure. Leaning towards a scam, just 14%, and Bitcoin is a scam. There's always going to be some people that think that, 12%. Now, if we ran this poll, let's say in 2022, what do you think that those numbers would have been like, Tevis?
Yeah, it's exactly what I'm saying, right? Like, I think the Bitcoin is legit section would not be the predominant choice.
Yeah.
It would be probably two of the middle options. But if we ran it back in 2018, it would probably be Bitcoin is a scam would be the winner, right? And so like every year that passes, you convince more and more people.
Yeah. Yeah, and it's exciting. I don't personally think of Bitcoin as a asset to use like to make purchases or anything like that. It's basically a long-term savings account for me that appreciates in value. So that's great. But I don't regard it personally as an investment. Now, will I use it and sell it at some point, for buying a yacht? Yeah, maybe. But probably not. My Bitcoin amount is actually too small. That's why I'm doing the DCA thing. It's an easy thing for me to do. Long term, I don't think I'll regret it, though there's going to be some volatility. It's a lot less volatile than expected. And of course, the longer this cycle remains, you're a shareholder of this company too. But you know what company tends to benefit when Bitcoin rises?
Oh, the hood, baby, the
Yeah.
hood, Robinhood.
Robinhood.
Benefits from
New 52-week high today. So that's not bad.
Yeah, I think since where I started my position, which was like way, way later than I should have started my position, which is, Roy, I think, what was it? Was it $14 that you suggested I go?
Yes. I pounded the table like, buy it at freaking 14, dude.
Uh-huh.
I'm giving you financial advice.
And I instead bought it in the mid 40s, but then I averaged up. I think I have like $52 average. It's up 25% from where I bought it at, which is like I've not been a holder for a long time. I've been a holder for maybe a few months now, and very encouraging to see. I kind of was hoping for it to pull back so I could buy some more, but I might even just buy it here. It's not like a significant chunk of my portfolio by any stretch of the imagination. Actually, I could do the math for you. It's not even 1% of the portfolio. So I can I can definitely add to that position. I want to add to that position. In fact, I'm probably going to add to that position regardless of the price over the next month or so, especially because I think S&P inclusion is going to be like a few months away. Isn't that going to be in June? Um, when the next S&P companies are announced, I think June 6th is
Um,
the date.
yeah, it's coming up soon. I need to look at that. Is it the first or second week? But
I
it's
think
relatively.
it might be Friday, June 6th or around
Yeah,
that. Yeah.
yeah. I was thinking
So
June 6th as well. So
that could be a short-term catalyst for Robinhood to keep in mind, guys, especially option sellers out there. Is if you're selling covered calls over June 6th, we're talking about Robinhood Cyber Ninja. Is if they get that S&P inclusion, then that's going to pop. But that's also going to be some nice premium implied volatility bounce for you over that week. So just keep in mind.
yeah, no, good call out. And I tend to do a prediction thread, sometimes video as well. So look out for that. As Coinbase just got in, so
Yep.
I've talked about it elsewhere, but yeah, Robinhood's getting in at some point. The only thing I think that prevents them from getting in, because I thought maybe like its association as far as a high amount of volume with being cryptocurrency would possibly keep them out a little bit longer, but almost everybody that has deep connections and is in the know, they got Coinbase in. So like obviously that's not an issue for them, but they might have too many financial services and fintechs specifically in the S&P 500. They want diversity, so they may go off of a really stupid company like Williams Sonoma instead of Robinhood because they like
Again, either way, like I think the company fundamentally is very sound, and I would be happy to buy it. It's just a short-term thing where I'm like, okay, well, you know, I, I would welcome any downturns, and so if that's the case, then I want to buy it prior to June 6th because if let's say Williams Sonoma or something, makes it instead of Robinhood, then I'm like, okay, cool. Like I can take that pullback and buy more. But if Robinhood is in fact selected for the S&P, then it's gonna bounce up and create some new all-time highs. So
yeah, last bit of Bitcoin news or Bitcoin related news is this mini ETF of Bitcoin is doing quite well over the last 5 days. You've heard of this one, Tevis? Go ahead and throw it up. Oh yeah, GameStop. That's right. So
as good as Treasury bonds, according to Roy.
I mean, year to date, yay, it's actually up. So it's outperforming PayPal. I mean, I like PayPal, but yeah, I don't actually have any GameStop anymore. It was when we were what I thought was going to happen was a pretty massive downturn, and it turned out to be I decided to de-risk, and removing that swing position was one of those. But congratulations to shareholders, and man, I hope another squeeze happens.
I mean, they have Bitcoin on their balance sheet, don't they? I think they recently made that change too.
Yes, they do. Yep.
Yeah, GameStop, they put Bitcoin on their balance sheet. I mean, look, man, it's something that sooner or later they're all coming around to Bitcoin, and I consistently feel underinvested. And it's crazy because the numbers get larger and larger in my portfolio, but there's certain positions where, regardless of how large the number is, I significantly feel underinvested whenever I revisit the financials and the actual prospects. And, even with Bitcoin, looking at the adoption worldwide and just zooming out on a yearly basis as opposed to like a weekly or a monthly, I just feel underinvested, quite frankly, because I feel like there's so much global liquidity to go around, especially with this generational shift that's going to happen over the next 5 to 10 years, that it's like a super clear no-brainer that's, smacking you in the face. I think you're doing it well with a consistent DCA. Like I don't have that DCA, but I probably should have it.
Do you know who inspired me to do that?
It was in Matt Money because I know he does
Matt
it.
Money. Yeah, Matt.
Yeah. No, Matt is as wise beyond his years.
Oh yeah,
he's a smart man.
he is. Yeah, he. I was talking to him about Bitcoin, and he was just like told me what he was doing and a couple things he was doing. I'm like, I mean, a 1% DCA. If I can't afford 1% of my income in that, I'm doing something wrong. So
yeah. I mean, you're losing like 10% to inflation every year. So I think 1%.
In Canada, maybe
even hedge that. Well, in Canada, you're losing much more than 10% every year. Yeah, it's called the snow peso for a reason.
Yeah. All right. Let's actually do a lighter topic, then we'll maybe go into Tesla.
Lighter topic than Canada. Yeah,
So
do it.
let's talk about your favorite stock. I don't know about your favorite company, but this has to be your favorite stock.
Adobe? Hold
Yeah.
on. Oh, no, close.
It's not your favorite stock, not
No.
company.
No, well, I mean, I said Joby's my favorite stock, but
Oh, yeah.
this is up there.
Yeah. No. Yeah.
Yeah,
Joby
5
number
and 1
one,
now.
number two.
They
So,
dropped 4 and 1 like a couple weeks ago, and now it's 5 and 1.
yep, 4-1, 5-1. Of course, for ED, for hair, no idea what biotin, vitamin B12,
Maybe
or
skin.
L-theanine, but added support. So,
Yeah.
is this just marketing?
Well, so actually, I made a post on this. Let me see if I can find it. Because I know you commented on that post saying for bootleg. Is this it? Yes.
Yeah,
Yeah.
probably.
Great. Well, actually, let me see what I said about this. Because, yeah, okay. I said, so, okay, first of all, Andrew, the CEO of HIMS, said much of the combination therapy innovation, like this one, the 5 and 1, is driven, and this is key, guys, listen, by existing customers on both treatments asking for the therapies to be compounded together. He says that uh, when patients can streamline and simplify their regimens, it helps drive adherence. And so, what I said in response to this, I'll just share my screen, was I simply said, okay, look, I'm sure all of the data they're collecting with MedMatch is instrumental in what combinations to roll out next that will have the biggest overlap and appeal to the largest customer cohorts. The thing people need to realize about HIMS is the extent of their data advantage. What do I mean by this? I mean that if they're rolling out a 5 in 1 solution, it's not just marketing, it is a subsection of their total users that actually will find benefits from that. That actually has all of those 5 treatments individually, that all of a sudden now can have a streamlined solution into one form factor. Now, it kind of sucks to be that individual that has all of those 5 things. It's like, God hates you personally. But the fact of the matter is that these people exist. Number one, HIMS knows who these people are. Number two, and the fact that HIMS is leveraging their data on those people to give them a bespoke solution that's catered specifically to them. What does that do, Roy? That means that those people will never, ever, ever churn from the HIMS platform.
Yeah, if it's a product that works. I did see some bears push back, and there's some people that are, I don't understand perma bears on HIMS, and we'll talk about like the short interest here in just a second. But
Yes.
literally every single bit of HIMS news, like HIMS could have the best news ever and like in $1 billion contract, it's something ridiculous.
Yeah.
Be like, well, it's not 2 billion, so HIMS is garbage, and I'm going to short it. It's like,
Yeah.
dude, it doesn't pay to be a perma anything, but if you're going to pick one, pick perma bull because you're going to make out okay. And this was one where they came out and they basically said, so I saw 2 things from bears. One is, and I kind of agree with this comment, that a lot of this is just marketing, that it's kind of showing off. I agree with what you said as far as data, as far as the personalization being like the moat. But I think in essence, it's a real product that will get use. Maybe it's good, probably is decent, for people that are looking for that, although it feels niche. But I think the biggest thing is it grabs people's attention, and that's more what it's for. It's kind of free marketing because they're like, hey, 4 and 1, 5 and 1. I mean, 10 for 1. Why not? Just put it all in there, all of your issues.
Yeah, I mean, I understand the marketing angle. I don't disagree with that. But like I think the people really need to understand, because here's what you do by saying it's a marketing stunt. And I'm not saying you're doing this personally, but I'm saying if the market perceives this as a marketing stunt, then all of a sudden it fuels this narrative that HIMS is just a marketing company, that they have no value proposition that's unique, that they have no significant moat. But if you're saying that this is a conscious decision that they're making by leveraging their unique data advantage, then all of a sudden you're giving them much more credit on the thought process that went behind this decision. And it's more deliberate and it's more unique to their value prop that you can argue against, that you can hold a conversation to say why HIMS is actually at an advantage compared to somebody else in that space is because they can do this, not as a marketing stunt, but as a way to streamline their offerings to a cohort of people that actually needs this.
Yeah. The other thing that I saw about with bears say, and this one I totally don't agree with because I think it's the permanent bears mostly that are saying this, is that they're like, oh, this is dangerous. This is risky. Combining all those things, that seems like a recipe that'll end in disaster. And the reality is, like, HIMS hasn't had any of these issues. And I think it goes back to what you said is, the data advantage. And also, I mean, 3 of those 5 items that they've combined in there are not exactly like vitamin B12. Like, what's that going to do to you?
Sure.
So
Sure.
now the
But
other thing that we want to talk about, and this goes up to Sagig's comment as well, whether or not we've actually had a squeeze. So price action was down today on HIMS and also Palantir. I don't know when those stocks will ever go up again. Feels like it's been a really long time. Just kidding. It's some of the top performers, but the short interest is pretty high. I could throw this up unless you have it.
yeah,
Here it
maybe
is.
I can throw this comment up because I think this is what you're referring
Yeah,
to.
yeah.
Okay. Yeah, short interest. Actually, let me throw up my post because I have the stock price overlaid onto it.
Okay.
So yeah, I just made this post earlier today on HIM's short interest. We can see here that the latest short interest numbers show 62.3 million shares sold short as of April 30th. That is over 32% of the float for HIMS, and that number has been consistently increasing. Now, what I did was I asked Grok to overlay the short interest with the stock price on those given days. And this is not outdated. This is not outdated, is it? Ah, crap. Hold on. Let me pull up the latest one. Did you have it, Roy? I think I have it here.
I closed it.
Right. Okay. Yeah. So it's basically no change from April 30th here. Fuck off. Okay. So there's basically no change from April 30th here. 62 million shares sold short here as of the 15th of May. And what we can see, I had it in my other chart, but what we can see here is that even as the stock price has been increasing, the short interest is also increasing. And so it's kind of crazy to think with this stock. Like we saw a pullback in February when the stock price hit $70 and topped out around there. And then we had the FDA news come out with regards to HIMS not being able to compound semaglutide anymore. And then shorts began their accumulation pattern ever since there. And they're continuing to accumulate now, even though the FDA decision is behind them. They've partnered with Novo. They released fantastic earnings and they're continuing to grow. So I don't know, Roy, what do you make of this?
It's weird because, I mean, they've seen the earnings now. Like last time, you could give them the benefit of the doubt, although it was still weird because it was a day after the Novo Nordisk partnership. So you would have thought there would have been some covering just because that was the main bear case, was not so much like that's going to bring them a lot of revenue, but simply because the risk of a lawsuit is a lot less. And that was the entire bear thesis for a lot of people. And like, why would you? Let me just throw this out. Like, if you're long and the thesis breaks on your stock, like you're like, okay, I don't see it anymore. It doesn't make sense, not because of price action, but just fundamentally, you get out. You don't wait. You don't wait for it to rebound. You just say, okay, thesis is broken. I'm moving on. And almost always that's worked well for me. It's been the right thing to do. Shorts, I don't know, man. Like greed goes both ways. And I think that they just got so greedy and they're like, hey, the stock has risen so much that, yeah, it has to go down. It has to go down. And instead, like, yeah, it went down a little bit today. It's not near where its recent peak was, but it's pretty resilient, actually, surprisingly so. So I think it's greed because they saw the results. They saw the guidance. they saw the numbers. Like there's nothing there that it's not quite as good of a quarter, even despite the numbers, as a previous quarter, but it still was a fantastic quarter. We saw the new hires as well. And all that news was prior to when this posted. So it makes absolutely no sense to me why they would continue to be this short. Now, does it make more sense for them to be short here than when Hims was at 25 bucks? Yeah, I mean, of course. Like here it's in the fair value range versus like at 25 bucks, that's
Right.
stupid valuation. It's like it- I don't know, like SoFi. It's like people that has been a heavily shorted stock for a while. We were talking about this like a year and a half, 2 years ago when it was like $5 a share, $6 a share, and it was heavily shorted. It's like the heaviest shorted mid-sized stock out there. Period. And I was like, okay, they're profitable. They're growing rapidly. Why would shorts do this? Like at this valuation, if it was at 60 bucks, yeah, I get it. It's purely based on valuation, speculation. Sure. It's just greed. And I think that there's a lot of groupthink too that happens for those on the long side. Yes, you see a lot of, especially retail, conglomerate towards certain stocks, but you also see that for shorts where they just say, "Hey, there's other people shorting this. I'm just going to jump in." And I know that there's people that do their homework. I know that there are credible bear arguments on Hims, not to this level. It's just reckless. It's insane.
Yeah, absolutely. And so here is the chart. And thanks to the chat for catching it. So the red here is the stock price on those particular days of when the report came out, and the green is the short interest on those particular days. So you're going to see, every 2 weeks or so, one dot on each of those colored lines. And so right here in February, when stock price was going up, you saw short covering, but then the shorts continued to add, even though the price is going up. So the price as of May 15th was about $46, $47 in that range. And it seems as though the short interest has somewhat plateaued. At least I would hope so, because again, we're at like 32, 33% of float. So we'll see. Hims doesn't look like it's going to stop. Of course, if it pulls back more, then you might see this short interest number keep rising. But if the stock price increases and continues to do so, then you might see some covering, or at least I hope you do, because I don't understand how else these shorts can afford to stay in the game.
So going back to Sigig's comment earlier, has a squeeze happened? Does that explain the price momentum or not?
Yeah, and I just really quickly want to answer Nate's question. Yes, the stock hit like 66, but on that given day, on the 14th, when the report came out, it was at that price. So like the volatility that you might have seen to 66 is in between these 2 points, or in between these 2 points. Now, in terms of the commentary on has the squeeze happened, I don't think so, because for the squeeze to have happened, like, yes, you could have had a squeeze here in February when you went up, but those shorts have accumulated and are now here stronger than ever before when the stock price is close to all-time highs. I mean, I think it's what, like 15% away from all-time highs, something to that effect, 20% maybe.
Further, where did that squeeze take it earlier? 70 something?
Yeah, it didn't hold that amount. It like reached it, and like even on the daily, it lost it. Yeah, I think. But even if we say 70, right? Like we're at 53 right now. So what? We're $20 away.
Which
Yeah, like I think Hims is just forming this massive freaking cup and handle. Like,
yeah, somebody commented that they closed their covered calls based on the short interest. Merv is like, yeah, I mean,
dude, like look at this thing. Like it just looks like a freaking
consolidating right now.
massive, like I think it's just getting ready for a huge move. I don't know. We could see a further pullback. I wouldn't be surprised if we do. Like this is a really volatile name, but at the same time, like again, the earnings came out, and the earnings were the thing that supported this move upwards to be more sustained. I think here you might have had some type of like sugar rush high in the beginning, where like it ran so aggressively, and then the FDA decision sort of brought it back down to earth. Do I agree that it should have fallen as far as $24? I don't think so. From 73, but again, we're right back there. Like if you went on vacation for 6 months and you came back, you wouldn't have even known that. Like, it's insane, the volatility of this name, which it makes it even more insane to then look at the short interest and being the way that it is still. Like, if short interest had fallen to 15%, it's still high by traditional standards, very high, but it would still be half of where we are right now. And you could argue feasibly that we've had a short squeeze already because the short interest went from 30 to 15. But if the short interest goes from, 30% to 33%, it's like, no, you haven't had a short squeeze, regardless of what the stock price does, because the short interest is still piling on.
Yeah, and that really, so I do think we had a squeeze, but a different kind of squeeze. There are multiple different types. There's gamma squeeze is probably the second most common, or maybe even more common than short squeeze. So we can see here shorts peaked, and of course were crushed, mini covered. Now that's 25% is still high and reckless, and it may have gotten lower like in between a reporting date. But yeah, here back basically at all-time highs as far as shares held short. It's kind of strange. And HIMS, just like to reiterate to you guys, neither Tevis nor I are invested in HIMS because of a short squeeze. We're not. I don't mind benefiting from it though. Part of that benefit has come from covered calls. Some of it's been taking profits at significantly higher levels than I thought that the stock should be at the time. And it tends to be when things explode this high that there is some consolidation. Now, as a HIMS investor, I love to see it consolidate in, like the 45 to 55 range. So that's like smack dab in the middle of fair value range for myself. Some people have HIMS a little bit higher. That's fine. But as it does that, and as shorts continue to hold, there's an extreme amount of risk because this is a company that launches a lot of exciting things, and it just takes one of those to get enough attention. This is also a very, it's not a retail stock. Like, that's one of the odd things about it is institutional ownership is significant. So that makes the small float feel even smaller. Now, as far as HIMS, there was something I wanted to cover on that. Oh, yeah. So gamma squeeze. I think that's really possibly what happened or contributed, at least. It's basically when market makers are forced because of just a significant amount of options volume on certain strikes. As it goes into the money, they're basically forced to hedge or forced to buy. And so that can contribute to a stock price momentum without shorts necessarily covering. Although usually you do see some covering. It's really weird that it's the same amount as a month ago.
Yeah, exactly. And it just feels, I don't know, it feels weird, man. Like, the shorts continue to pile on regardless of the stock price surging. It feels as though the other shoe is going to drop at any moment from my perspective. And it's interesting, right? Because some analysis was done around if all those shorts were forced to buy back higher, what would that catapult the stock to? And I think the response from, I think they asked Grok, the response was somewhere between 150 and 200. As to like just the short interest that we have right now, if we did go into a squeeze, what would that launch the stock into? I don't think that's like insane. Like, I think it's crazy for us to squeeze to that level, but for us to go to those prices, like, I don't think that's necessarily crazy, because the thing you have to keep in mind with HIMS is like, it's still a $12 billion company. It's a itsy bitsy company when compared to everything else in the publicly traded markets, right? And this is a company that's doing, 2.5 billion in revenue this year. They're growing triple digits. Everything looks very good. I think one thing that might launch this higher is an Eli Lilly partnership. And I think that's something that's going to be on the horizon over the next 6 months. I think Novo was just the start. And Andrew Dudum, their CEO, has mentioned that he wants to deepen the partnership with Novo. And I think Eli Lilly is just a very simple extension from that. So we'll see if that prediction comes to fruition or not. But that is something that can really launch the stock to new all-time highs. I mean, look, I went on the record and I said, I think HIMS is going to hit all-time highs this year. And I also went on the record and I said, I think HIMS is going to hit triple digits this year. So I do see the stock crossing. Now, does it hold or does it not hold is a different question, but I do see it crossing $100 this year. Just based on the fact that we have this short interest that will launch it a little bit higher, but also on these partnerships. Because what these partnerships do, Roy, is that they alleviate one of the biggest bear cases, which is that the pharma companies are going to crush HIMS. If Hims is partnering with the pharma companies, they're not going to get sued by those same pharma companies. They're not going to get crushed by those same pharma companies.
Yeah. Yeah. And there's a little other news too here. It's definitely possible that the stock, gets in triple digits sooner than we expect. If a short squeeze happens, and there's nothing guaranteed, the market could shift to risk off and we could see Hims fall. I would be more surprised if we hit 25 first again instead of 75 at this point.
Yeah, and look, like it's crazy because we're sitting here having this conversation around whether or not Hims can reach $100, and you got to keep in mind that $100 would mean the stock doubles from here. If you were to buy this stock today and it hits $100, you would have doubled your money. Basically, it's at $53 as we speak. That's a crazy return to get on a stock in a single year. It's I mean, what's the S&P typically, like 15%, something like that. So it's quite crazy, and I think it's just a matter of having discovered this company at an inflection point where it's getting ready and to entering prime time.
Yeah. All right. So that leaves us with Elon/Tesla.
Okay.
And then your guys' questions. There's a ton of amazing, awesome Elon Tesla stuff, and not everything was good. So I guess real quick, delivery numbers absolutely dismal in Europe. They're down almost 50% year over year. Not a huge surprise. We've talked about brand damage. It's most severe in Europe. Chinese numbers were actually pretty good. Though, did you see BYD actually is slashing their price on a lot of their models by like 33%?
I didn't see this. Is that as a result of like demand concerns or what?
I thought so initially, but it doesn't seem like it's the case. It seems like that it's a similar, partly. Overseas, yes, demand concerns in some places, although they're doing quite well in Europe. In China, they're doing very well, but there is a lot of competition for them, so that might be a factor. They have a good reputation as vehicles. Like, I don't think they're terrible vehicles, especially for the money. I don't think they're as good as Tesla, and I think Tesla is, at least in China, seen as more of a status symbol than BYD, just because BYD is so common and so cheap. But that's probably going to be a drag on Tesla anyway, because I mean, if as far as pricing, if a Tesla is 3 times the amount but only twice the car, and that's questionable, then yeah. But the Model Y is performing very well there. Among SUVs, it was actually the number one vehicle that sold over this last month. So that was very good. And of course, United States numbers were actually very good. Now, if you look at them where you think that they should be, maybe it's a little bit soft. There is some signs that we talked about it last week of some stockpiling up here in the United States despite that, but it just goes to what they're able to produce as well. And of course, there's a potentiality, it looks like, of the EV tax credit going away, which I don't think surprises anyone. That should drive demand forward, though, for Teslas this year. But this right here, I know you like the wartime CEO thing, and we'll talk about that in a moment.
Yeah.
This got me the most excited. I love this. I love it. So I missed this earlier. This is May 24th. I just saw it like 30 minutes before. Sawyer caught it, and it's legit. Anyone in the U.S. can now schedule a 48-hour test drive directly online with the new Model Y and Model 3. Apparently Cybertruck as well, at least in most localities, and you can book it and drive it. And then you select the time, and this is free, by the way. It doesn't cost you anything. So as a consumer, I love this because we have not actually tried the new Model Y. I know that we'll love it. We've driven the old Model Y. It was great. We got with the Model 3 instead that was used. We do plan to buy a new Model Y. Please use my referral card by the code if you plan to buy a Tesla. Save yourself some money. Give me a little credit too. But this is really cool because it took 30 minutes for us in that test drive to just know, like, yeah, I've done the research. I calculated the costs. I asked the questions. I did a ton of research on Tesla before I got into that vehicle. But most people don't. But if you have 48 hours, that's long enough for several things, Tevis. It's long enough. If you have a charger at home, which a lot of these people won't, you plug it in. You're like, okay, this is actually really easy. It's long enough probably to go to a supercharger and try that at least once. I don't think full self-driving is in this. They usually don't have that equipped for demo drives just because they're like, hey, if somebody has never been in a Tesla, let them just experience that. but it's long enough also to fall in love with the vehicle. Now, some people won't. They'll get into it and be like, it's not really for me. But it gives people that time to just really think about, okay, do I want to just keep this vehicle? The other thing too is there's going to be people that are abusing this, or already are, that own Teslas and are just like, hey, I get to have a free car rental for 48 hours, and you can do that multiple times. There's no limits. I actually messaged a friend who was looking at buying a Tesla at some point.
Yeah.
And I'm like, hey, next time you guys need a second vehicle, do this. Save yourself some money, enjoy a Tesla. He'll probably buy one as a result. But for myself as a consumer too, like, this is awesome. The other thing we get to do, we already know how it charges. We know how it works. We know we're going to love it. But we haven't had a second Tesla in our garage. It's a 2-car garage. Being able to visualize that, we have just one charging port, like just playing with that a little bit, helping us understand, yeah, this is absolutely going to work. This is going to be great. That'll give us like that last little bit of resistance that we have, other than just hoping against hope that the interest rates actually are reduced. Because right now the all-wheel drive, which makes sense in northern climates, is the same cost functionally if you're not leasing it, but if you're financing it as a rear-wheel drive, which is silly, and we're not going to pay all cash for our vehicle right now. So I'd rather have that money invested. Oh, yeah. Thank you so much for throwing that up, by the way.
Yeah, look, I think so. I think functionally speaking, like, with regards to products like this, seeing is believing, because it's such a far-fetched value proposition for these companies to be making. And I say that with full self-driving as well as with Optimus, both the value props are so ambitious, and the perspective of where this can go is so incredibly profound that for many people, ordinary people, they might have heard sound bites about Elon, or they might have heard tidbits about Tesla, or one of their neighbors or a coworker or somebody has a Tesla. But once they actually hop in and they try the full self-driving, and once they hop in and they try the acceleration of this thing, which is the first thing that sort of got me, and they try the big touchscreen, they play video games in the car, or whatever the case may be, then it's very easy for them to extrapolate and imagine a world where they can have this as their vehicle, and how that will unlock more utility and more efficiency in their lives. And I think that is best demonstrated, and it can't be like, it's like a show don't tell type of thing, right?
Oh, yeah.
Because the technology itself is such a step change from just regular ICE vehicles. And I don't mean just because it has software updates over the air, or just because it has a giant touchscreen instead of like analog controls on like your air conditioner or whatever. I mean because this thing can literally drive itself.
Yeah. And again, I don't know that will be available for the demo drive folks. But even without that, like, you get in the vehicle and it's like, okay, this is awesome. Now, that said, I do see, a couple of people, or one person noting like, hey, they're going used. That's what we did with our Model 3. We got it. No regrets, especially with that EV tax credit, if you qualify for it. Our Model 3 2022 cost like under $21,000, including all taxes and fees and everything. It's like, for a bang for the buck, you can't beat that. Demand is very, very high for these vehicles. I think that'll continue all the way through the end of the year, simply because it's a great car for the price, and that EV tax credit is very compelling. But it's like a gateway drug that once you get a Tesla, like, dude, we still have a non-Tesla. And I cannot wait till we're actually, my middle son's going back to college on campus this next fall. He's been just at community college here. We're like, hey, take the car with you, or we'll just sell it and give you the money, because we don't want it anymore. We want another Tesla. So
yeah,
Tesla agreed.
And look, I think Tesla is the stock is doing very well. I mean, if you had bought when Tim Walz told you to sell, you'd be a very wealthy man right now, or woman.
The funny thing about Tim is he doesn't own stocks, but I hope that he shorted it. I hope he did.
Let's just take a look. Let me see. Tim Walz, Tesla. Let's see if I can find that video on Twitter real quick. Yeah. When did this video come out? Do we know this?
It was like 220 or something like that. It was near the low. Like, that was basically a signal right there.
Hold on, let me play this for you guys here. Actually, I should zoom in my screen because some people have some very choice words for Mr. Walls here.
Oh, yeah.
So
Yeah, don't say that.
maybe zoom this in. Like, how do I do this? I will go to another post that has it because people are interesting, man. All right, here we go. Let's put up the volume.
Can't hear it.
You can't hear it?
No. But it has the subtitles, so
Yeah, let's see.
if you want, you can play it just like that and do like a
225 and dropping. So, and if you own one, we're not blaming you. You can take dental floss and pull the Tesla thing off, and take out. Just telling you. Saying on my phone, I don't know. Some of you know this on the.
So yeah, so Tesla as of overnight trading is at 367.5. So let's do the math, and let's just say 225. I mean, look, that is a pretty. It's a 55% increase from March 19th, which is when Tim Walls went out and had that. So yeah, 55% increase. That's like what the S&P yields in 3 years, basically. As Mr. Tim Walls gave you in literally 2 months.
Now, this is related to Tesla, sort of. Headline is Blink just charged me $500 million for 1 hour of charging. Now I can't get in contact with the customer service. Blink is a company that's basically going out of business, but obviously you should buy call options because they're going to report a massive increase due to this one sell of $500 million. No, not just kidding. Don't do that. Imagine this sort of event if Tesla did that with superchargers. Superchargers tend to work well. I did run into some problems on the route back from that 2,000-mile road trip that we took. But one of those risks, and Bernie is obviously a Tesla bear, maybe perma bear, don't know. But he's right in this. Like, if the robotaxis come out and they have issues, and they will have issues, like it's going to happen. Waymo had issues and continues to have issues here and there, but overall it works. That's going to get a lot of attention by the media. Even more so than like absolutely crazy and ridiculous things that are unsettling like that. So I'm not really that excited about the robotaxi network. I think it'll work okay. I do think that they have an opportunity to scale. I do think there's a lot of upside potentially. Where I think that it's more exciting personally is as far as the autonomy. And that's really where I'm seeing this pivot that Tesla is making. Shouldn't have closed that window. Let me throw this up. And then we'll get into the wartime CEO thing in just a second. And yes, Elijah, I can bench 225. So yes. Tesla said this, and I was like, this is the way that they should have been framing their full self-driving all along. Not like, hey, you can take your vehicle, your personal vehicle that you use, and make money off of it. Now, when we have a new Tesla, yeah, maybe we'll do that with our older Tesla, the Model 3. That's fine. Probably not our new vehicle. And a lot of people won't. They're very reticent, even more so than Airbnb folks were with their homes, with their primary homes. But they said here, imagine you need to drop off something on the other side of the town. Instead of driving there yourself and wasting time in traffic, your car will be able to run that errand on its own while you do the work or do other things. On the way back, it could bring you your coffee order without high delivery fees. This will be possible in a robotaxi future. One of the comments under there is like, Uber already does that. Well, it says without high delivery fees. Like, come on. Now, how does this work? People had a lot of questions, and some of them are pretty valid. Like, well, usually if there's a lot of these going around and this becomes more and more of a reality, businesses will want to capture that. We saw that with Uber when Uber was new and DoorDash was new. They built those sort of things out and around that as well. And so I just did some brainstorming as well. And I was like, hey, this is, the way that they should probably frame this, because this is what most people would actually use it for, beyond just, and you don't know this until you're in it, but full self-driving when you're using it. And I'm using an older hardware stack, and I'm using, I think it was 12.36 at the time, not the 13s, which is for the hardware stack 4. It was good enough that in a 2,000-mile road trip, we had one forced intervention, and I think twice where we took over. And outside of that, basically the way it feels, once you get used to it, it is a little bit nervous the first time you get into it, like driving with a teenage driver. You're always right there ready to grab the wheel because you don't trust it yet. You need to build that trust. But once you're up to that point, it feels like being a passenger in your vehicle. Now, you should not play on the phone. You shouldn't fall asleep. You shouldn't do those sort of things. There are ways that people cheat the system. Then they shouldn't be doing that. I won't say whether or not I've ever done that. But ultimately, this is the other aspect of that. Beyond the actual driving part for yourself is it can run errands for you. It can drop you off at the airport and go home. We would have used that instead of an Uber. There's been multiple times I've gone to the airport. We live pretty close, but I have family members that are like, I don't want to take you. And it's like, well, I either park and pay that fee, take an Uber, or beg a family member. So the car does it for you and goes back home. That's amazing. Pick up your kids from their friend's house. That's a reality that we'd love to have and do. Allow you to keep your keys when health or age or otherwise would rob you of being able to safely drive. For my parents, they're still able to drive, but at some point, and they're having a lot of friends go through this, they're in their late 80s. Some of their friends are in late 80s. My parents are in early 80s. That's a tough thing. This allows them to keep driving, and it's a huge thing. Drive back home while you stay at work for your wife to put the important item that you left back in the car. I've had that happen before. I'm like, yeah, it's not worth my time driving back. And she doesn't want to drive out. We just sit in the car. It just plays fetch for us, pick up groceries, lunch, and there's a whole lot more too. So I loved seeing Tesla, at least in that post, and we'll see how they build off of it, at least kind of get it. Like, okay, people are not that interested in renting out their own personal vehicles. Yeah, they can do that. But this is really cool.
Yeah, those all sounded like very personal examples that you just drew inspiration from your birth.
So those are all very real examples, not like made up hypothetical, like that we would have used over the last 6 months. Some of them often.
For sure. Yeah, and like, again, I think it all depends, and I've said this before, it all really depends on how this full self-driving event is perceived in June in Austin and in California where it launches. And depending on how that's received by the market, how quickly then does that scale? Like if there is some hiccup in June, if there's some accident, if there's some whatever the case may be, it will throw serious roadblocks in their ability to roll this out nationwide and then in their ability to roll this out globally later on. So really that is going to be the yardstick to measure the next 12 months of full self-driving adoption curve, is how well that event goes in June. So that's going to be a big milestone for Tesla, because if this event goes well and if they launch, let's say, nationwide by the end of the year, and they scale up from a dozen cars to 250,000 cars that are on full self-driving, then great, that's fantastic. But if it doesn't, then it's just like, it's going to be a further leg, because I know a lot of investors in Tesla have been waiting years and years for this day to come for full self-driving.
Yeah. Little Optimus update, but rather than go into that, this I think probably is what you were most excited about, Tevis.
Yeah. Because
you sent me like 50 posts on it and told me you're excited that your entire portfolio is now Tesla or something. Like, no, not really.
No. Yeah. This is so Elon posted on May 24th saying, back to spending 24/7 at work, sleeping in the conference server factory rooms. I must be super focused on X, XAI, and Tesla, plus Starship launch next week as we have critical technologies rolling out, as evidenced by the uptime issues this week. Major operational improvements needed to be made. The failover redundancy should have worked, but did not. So I know he talked a lot about X and his other companies there, but Tesla was also, something that he did mention. He was recently interviewed at this Qatar Economic Forum, and he basically said, like, hey, look, the bear case around the bad publicity for Tesla, around the bad Europe numbers, all of that is behind us. And he's mentioned previously in earnings calls that looking forward, 26, 27, 28 should be great years financially speaking for the company as FSD continues to launch, as Optimus begins, production in a wider scale. Videos have come out recently. I don't know, Roy, if you have those loaded up, but if not, I can search for them, of Optimus doing all of these repetitive tasks. I can load that up in just a second. But look, the one thing I will say, and then I'll let Roy respond, is that having been a Tesla investor for 6 years now, I'm getting old, bro. 6 years now, since late 2019. What I can say is, if you had sold off your Tesla stock every time Elon, goes is super distracted, and you had bought back your Tesla stock every time Elon goes into wartime CEO locked in mode, you would have done tremendously well, because there is a super high correlation when he says, I'm sleeping at the factory floor. And when people say, Elon, what are you doing on Memorial Day? Because it's a 3-day weekend. And he responds saying, working. I think that has a very high correlation with lots of great things happening from an innovation perspective at Tesla, which, given the nature of the fact that Tesla is a stock that moves on sentiment and on the story, innovation equals increased stock performance and maybe shoots up in the short term to be overvalued, and the financials have to catch up. More so, I would say, this time around, because the financials are seriously plateauing. But every single time Elon's like, hey, I'm going to be locking in, and especially this time, I think he's taking it very seriously, because I think he realized that the Doge cuts are not going to be enough to get them there, and that it really is in his hands to a disproportionate degree to everybody else, because he's literally the one leading the charge on the robotics front at scale with Optimus, and in the AI front at scale with full self-driving. And so he feels a disproportionate amount of responsibility over the US growing into their GDP required to justify the debt that they have. And he couldn't do it by cutting. And so now he feels an obligation to accelerate that transition, to do it by growth. And I think that's a very powerful thing if you're a Tesla investor going forward. I think that's exactly where you want him to be, because so far over the past several years, he's been incredibly distracted.
Oh, yeah. Yeah. And distractions don't help. And you made a good point there. And what I really like too is this is not motivated for more money. Like, Elon has all the money that he needs for multiple lifetimes, and for any business that he wants to do or buy. It's not even motivated for shareholder value, which, I mean, that'd be nice, but he's done things, but that usually holds his attention for like a week or two. That's it. I don't think he cares much for shareholders, honestly, like some, but not a lot. What he does care about, and people could disagree with him, and that's fine, is the human species and America. Now, what he does is about that, you might disagree with, and people might disagree with, and that's fine. But the ramifications are basically this. He got in, Doge, he's like, hey, we need to cut the government. We need to do it significantly. They ran into a lot of roadblocks. And then you see that big, beautiful spending bill, which is mostly a debacle, just ridiculous, irresponsible. There's elements that I like, but man, like, they should not be spending like this, like basically in wartime mode. It doesn't make sense at all. Elon Musk sees that and is like, okay, Doge can buy us a little bit of time, not as much time as I expect. The only way out of this for America is to rapidly expand GDP. How do you do that? Automation, robotics. And so he's like, hey, let's do that. And if that doesn't work, then we better do this. And of course, this event was delayed, which, shocker, Elon Musk, things being delayed. I didn't get you to laugh. I thought I might on that one. But the road to making life multiplanetary, which might even be coming out like here, it might have actually even come out while we were talking. So, but it'd be very interesting to see what that happens there. But I love him actually being motivated by things that are core values for him. And the reason why is he'll stay in wartime CEO mode significantly longer, since it's a personal conviction that he has, versus like, it's for shareholder value.
Yeah, and look, if you've read the Isaacson biography or even Ashley Vance biography, you'll know that like his personality is such where he feels whenever his back is against the wall is when like he seriously needs significant stakes from a risk perspective to do his best work because he feels as though he has no other alternative other than to succeed at all costs. And it's counterintuitive a little bit to wealth accumulation because as a result of him having had 300 billion net worth or whatever it is, like that's a very very comfy position to be in where even if you have like a fraction of that, it's very easy for you never to work another day in your life because you're like, screw that, I've made it, I only have one life that I'm living, I'm not going to redo this. And he has to essentially simulate uh, or provoke that part of his mind. It reminds me of like I don't know if you saw the Last Dance documentary where MJ was like Michael Jordan. He would have to get himself into this weird headspace to be able to perform at his best because he was incredibly competitive. He would say like he would create stories about like in his own head about what his competitors or what his like the other opposing team members were saying, were like talking shit about him so that he could like amp himself up to do his best work. And I feel like to some degree it's the same with Elon, where he needs significant stakes, where it feels like the whole world and all his companies and everything is falling apart for him to actually like do his best work.
Yeah, no, I think that that's the case. He functions best in these conditions. So, with that said, let's go ahead if you don't
Hold on,
mind.
let me share this video with you, and I want to get your thoughts on it.
The Optimus.
I'm not gonna play the music because I don't want to get us both demonetized. We really work hard for those $1.80 payouts that we have from these live streams. And no, I'm not joking. That's pretty much what we make from these live streams. But I will play this, and we can just do commentary on top of it. So I'm not sure if you saw this, but this actually came out a few days ago, and it just showcases Optimus. I mean, this is sped up to 1.5x speed, but this is just everyday things. Putting the trash in the trash bag, picking up the brush and the dustpan, cleaning the table. Tear a paper towel from the roll, like super basic stuff. Pick up a spoon, stir the pot, cook me some pasta.
It's pretty clunky, to be honest.
Dude, it's like, it's so early days, but I love how like people just don't like, it's so normal to the people on the factory floor. They just like walk around with it. It's just doing its own thing. It's just an employee.
Yeah.
Push the microwave button, close the curtain. Look at this.
Yeah.
And this is the cool thing. So all of these tasks are done by a single neural net. And the cool thing about this is because they're all by a single neural net, the moment that one Optimus is like stirring the pot and the other one is like pushing the microwave button or whatever, all of that is getting downloaded onto like a central brain where they're all teaching all the other ones how to do these tasks. And that's the thing that's going to accelerate the learning so much, is that shared hive mind almost that all the Optimists have, where you're going to get disproportionate amount of growth in a shorter time frame because you have legions of these bots all doing different tasks and they're learning the different use cases. And this is how the actual Tesla vehicles got so good at full self-driving, is because like, when there's a truck on the road blocking your way, or when there's no line dividers on the road, all other Teslas around the world are now synced with that information and can handle that circumstance if they ever encounter it. And it's going to be the exact same thing with Optimus. And I know you're laughing at comments, so I'm just going to take a look now.
Yeah, Elijah and Gridup are just killing me. Kane and Jasper too.
I'm not going to put those up on the screen, but I guess they're already up on the screen.
Yeah. So the interesting thing about this too, like it's clunky, it's a little awkward, it's still early days. Figure might be ahead here too, but like the way that Tesla is building and the way that they like their whole ecosystem, it works very, very well for Optimus. I think there's going to be multiple winners here, especially in the United States, and those winners are going to be domestic. Anyway, Optimus previously, like they showcase Optimus in that Tesla event. This feels like forever ago, but I think it was 6 months ago on Autonomy. But those were at the time just kind of like you saw in the training part of the video, just people hooked up with VR glasses and gloves and everything, doing everything for the robot. That's why they were very smooth. That's why they interacted the way they did. Here, basically, people did that. It was uploaded into the neural net, and then Optimus is like, "Oh, well, I know how to do that now." Now, is it doing chores like a 3-year-old? Yes, it is. But it will only get better from here. This will actually be the worst that you see Optimus, and that's an exciting thing.
Yeah, absolutely. Okay, so now we can move on to the next topic. How long before Optimus is serving burgers at McDonald's? Bro, shorter than you think, okay? Like, there's not a rocket. Like, a lot of that stuff has been automated and abstracted away to make it faster from a production line perspective. And so it's going to be shorter than you think. The fact that Roy goes off camera just makes me want to laugh because I want to look at comments now. But yeah. Okay, Roy, let's move on.
All right. Tag some comments, and you guys go ahead and ask some comments. We've got about 20 minutes left or so. So I did see one that was KULR, ticker symbol cooler, while you're looking for other comments. That one is a nuclear energy play. If I remember right, it's something with a scrubbing function on top of the cooling towers on nuclear. It's been a little while since I've swung trade that. Yeah, long-term, like energy is going to do well. It seems like nuclear energy is catching very much a bid. I had somebody tell me about a nuclear company that they were invested in. They're like, hey, you should get into this. This is like 2 weeks ago. I'm like, I kind of wish I did, but there's other companies I'm invested in. I'm like 95% invested right now, so I'm fine. But yeah, I think that a lot of these stocks, whether they're directly like Oklo, a nuclear energy play, or it's something like Cooler that's tangential, those are going to do well over time, but they're going to be very volatile as well. So that stock, like I think it had a squeeze at some point. I did a quick 3x on it. I'm like, hey, that's good enough. I'm out. Maybe I'll get back in it as a swing, but long term, I just prefer to invest in something that I'm not dependent on ultimately regulation changing. I never like to do that necessarily. And there's a lot of local regulations. I don't know if people remember this, but have you heard of NIMBY before?
Not in my backyard.
Yeah. That's a huge thing with nuclear reactors, which I understand where they're coming from, especially back in the day when there were question marks on them. But
yeah,
I don't know. Like, I think a lot of places around the world and also in the United States, especially in the Midwest, they need to build them well and regulate them well. But we need energy, and so they're going to benefit for sure. I just don't know about individual tickers. So.
All right, I want to ask Sagig's question because it was like the first thing that he asked. And I am bookmarking them, by the way. He said, on SoFi, how do you guys explain JP Morgan performed better since the November election? Do you think it may tell us SoFi is seen still as just a bank?
I think banks have just outperformed fintech recently, and that's the reason. No, I'm just kidding. JP Morgan Chase is seen as the lead bank, and the banking sector has done well. But they've also launched some interesting things. There's a lot of different vectors, but they're also doing weird things. Like, this is a short amount of time. I know if you're trading both, if you had a pair trade there, you'd be doing okay-ish. But like, I think it was today or yesterday, I saw JP Morgan Chase basically saying, hey, we're building more physical locations of banks because that's the way we can grow and reach the very super high premium investor, that it's going to be in very targeted markets. I think it's 14 locations. It's like, hey, maybe that'll work, but it just seems really backwards. So long-term, give me SoFi over JP Morgan Chase. I think both will do fine, and anything can happen over any like 6-month period.
Yeah, and like I do think SoFi is seen by the market as a bank. Like, I don't think there's a lot of debate around that point specifically. So yeah, I mean, the stock price action, it's weird, right? Because it's not super volatile. It doesn't really move a lot. It trades in a channel. And yet there's going to come a time like last fall where it just squeezes up 100% in a month. And you're like, where the heck did this come from? And so I think like if you draw two lines, like similar to what I put up in the HIMS chart, right? One line is the short interest and one line is the stock price. In the case of SoFi, if one line is the underlying business fundamentals and the other line is the stock price, you're going to have the stock price lagging the fundamentals for a long time. But there will come a point in time where like it'll bounce up 100% to come to an equilibrium. Last year, it came to an equilibrium because the stock at this point last year was at $6, $7, and now it's at $13, $14. So it basically doubled. And I think that equilibrium will follow again, maybe this year, maybe next year. I don't know. I'm not a prophet, but it will get to a point where those two lines, like the fundamental one, it's like executing, going on a 45-degree angle, let's say, consistently. The stock price is zigzagging around that. There's stocks that follow it very closely, and there's stocks that lag behind for a decade. And then after a decade of lagging behind, they just run back up and catch up with fundamentals. And SoFi is no different, and I think it'll have its day in the sun. And I'm not worried about that at all, because all I'm looking at as a yardstick is the underlying business fundamentals. And the market can judge it with whatever underlying metrics the market wants. It can label it a bank. It can label it a fintech. I really couldn't care less, so long as the growth rates keep coming in and the company keeps executing. And with that, am I considering trimming SoFi and using proceeds for something else? I have considered it at times. It's weird, right? Because I actually was considering it even today. And it's just a question I ask myself. It's very compelling to fantasize about the idea of selling SoFi and buying something that will yield me higher premiums when I'm running the wheel. But at the end of the day, I think SoFi is, like, again, like I said before, long-term executing, and it's going to be just fine. And the company is doing well. So I'm not too concerned about that. But it has absolute crap premiums. So that's the only thing that I really that really changes my mind a little bit.
I put a couple of questions for you to pull up there in the comments if you want to grab it. But yeah, for myself, I've not really sold SoFi. I did sell. I closed out all of my call options, my leaps that were going to expire in January 2026. They were profitable, but I was just de-risking at the time. So shares have actually added rather than decreased. And it's gone up since then, which is nice. Yeah, Circle. So this is a year of stablecoin. It's being implemented, and I think Circle is probably going to be the main beneficiary. There's going to be multiple winners, and I think there probably needs to be. Tether, I have a lot of concerns with Tether, and I don't think that there's a lot more regulatory scrutiny right now. Some of that is MiCA over in the EU, also in the United States, some consternation over some Tether practices, which frankly, it's like 5 years overdue. So yeah, I think that they'll do well. The problem with Circle is most of their revenue actually comes from interest. Basically, they have the stable coin. They are able to, charge fees for use of it by certain companies and partnerships and things. But almost all of their, and I've not looked at the documents or anything, so correct me if I'm wrong, but almost all of it is dependent on those high interest rates for treasury bills. Now, as the interest rates go down, what's going to happen? Well, all of a sudden, they are not getting nearly the premium, nearly the amount of money that they had before. Have we been higher for much longer than I expected? Yes. But at some point, I think that that's going to have to go down. So I personally wouldn't invest in Circle or any stablecoin company directly. Paxos might be an exception if they ever do go public. But yeah.
Okay, I'm going to give you the next question, and I'll be right back in a minute.
Does HIMS have any kind of moat that would keep someone like Amazon from just doing the same thing and putting them under? Chris, it's funny that you mentioned that. Go back maybe like 5 or 6 months ago. Amazon launched a product that was very similar. Now, HIMS basically has, and I can't throw up screens because Tevis is gone. They have some generics that they sell. Anybody can do that. Amazon can do that. Amazon can do that at a faster scale or a larger scale than anybody at a cheaper amount. I mean, they can like give it to you for $0 if they wanted to. Amazon has a ton of money, which is not great. And when they announced that, HIMS stock plummeted. And that's when I like doubled or tripled my position because I'm like, okay, the market does not understand what HIM's advantage really is. And we talked about data specifically. They're a data play. MedMatch is just a part of that. Look at the recent hires. They have, of course, the guy from Amazon that helped develop the pill pack for Amazon that's going to help scale that side of the business. He's also related to, I believe, that his startup company was Scale, which helps with automation, and they're always wanting to get more efficient on that. But their COO as well that they hired, he was originally the CEO of Cruise, which I know Cruise did not do well, but it was credible competition for a while. The guy is deeply immersed in AI, automation, and that sort of thing, and data. And this is what HIMS is really building out as their moat. They're using that in a couple of ways beyond just the flywheel effect of accumulating customers, and also developing just even more of a lean vertical integration that they have. The big part of it, though, is that personalization. We joked about and talked about that 5-in-1 pill. I don't think that that's personally that compelling. They're just showing off. But they do have a whole lot of levels of personalization that they can individually customize that matches for you based on a lot of data that they aggregate. And the more customers they have, the more data that they have, where they're able to give you products that and tweak them so that they work better for you. And if you want a multiple, like 3-in-1, 5-in-1 type solution, you can do that. It's going to be a lot easier for you to keep track of rather than like, I need to take 5 different pills and all sorts of different form factors. You can specify the form factor. You can also specify as far as what you want in that pill, as long as those don't contradict each other. So the personalization is really what makes them sticky. It is their moat that is growing rapidly. And like a year or two ago, that's what they were talking about mostly. I didn't get it at the time, but when I spent some time studying the business, that's really the key differentiator is those two things: personalization and that they're data driven.
Yeah, I think that's a good summary. Personalization is going to be huge, and I think people are underestimating it. And the data advantage, with their new, acquisitions into the at-home testing facilities, like I think that's going to further deepen that data moat, which will then further deepen the personalization mode. It's a virtuous cycle that keeps feeding the advantage that HIMS has over somebody like Amazon. Have you looked into Sezzle's Q1? I don't know what this company is.
It's a buy now, pay later company that helps you build your credit score. I am very skeptical of buy now, pay later in general, like as a standalone business.
Yeah.
I think it's dangerous. It opens up another credit box that didn't exist, that doesn't factor into like traditional credit ratings. And if the consumer has weakness, I mean, we saw it with Klarna. Klarna is probably the biggest out of these, other than Affirm. Look at Klarna's reporting. Now, it's not public yet, but they're thinking about doing it, so they are reporting. They had a lot more delinquencies is the wrong term. Help me out. Where they're not able to actually pay back. Default. They had a lot more defaults than expected. There's a couple other issues that Klarna had too, which was of their own making. Still an interesting company, but I think that there's going to be a lot more regulatory scrutiny, and it might fall after some sort of episode of consumer weakness that causes a lot of these buy now, pay later high flyers to really implode. Now, for a while, Sezzle, I think, will do well until that moment. But my perspective is it's a ticking time bomb. Affirm is a little bit more diversified than Sezzle, even though it is mostly buy now, pay later. I'd rather be in Affirm if I was going to go that route, or go with something after a Block. I don't like Block that much just because of the CO, but Afterpay it feels right as far as waiting in that business, and it works well. Also, PayPal, they acquired Payday a while ago, and it's a part of their business, but it's not so big that it puts them at risk.
Yeah. I am not necessarily a fan of buy now, pay later in general. I think the business models can lend way to predatory practices, and I just think that it's a kind of a brutal way to make money. Like just from a sleep easy at night perspective, right? Because the only way you make money is you don't make money off of people who have the ability to pay for that item immediately. Because every time I get a buy now, pay, like every time I opt in as a customer to buy now, pay later, it's like 0 interest in most cases or almost all cases. Because otherwise I'll just pay it, myself. So the only way that they make money is off people who either cannot buy it themselves in all one lump sum, or that don't have the sufficient credit to do it. And I just think that that's not the security that it's chalked up to be. And like, of course, they have all their underwriting models, and they know who to offer it to, and like it all adds up in the end. And some of them can be very profitable, but I don't know. Like, I wouldn't even say it's like on principle, I won't invest in them. I feel like there's easier businesses to make money off of in the market than buying out the company. So I haven't really looked into them in that level of depth.
It real quick on that too. Sezzle was actually my pick for a hedge against the market. That if we went through weakness, and we did, I would have had puts on Sezzle. I don't short. I think there's too much risk with sorting. Puts, you just lose the premium, and that's fine. Instead, I chose to do block because that was and it worked out very well, by the way. Look at block. So it worked out well for me. If Sezzle has an option chain, I might actually consider doing that as a hedge. When I do hedges, by the way, I'm not doing hedges of like, I plan to make money on the downside. It's to protect my portfolio in the event of macroeconomic weakness. And I think Sezzle is at risk.
Okay. All right. I noticed the market, and I know you have to go at 9:30, so maybe we'll wrap after this question. I noticed the market overall trading volume had been a lot lower these past 2 weeks. Are buyers getting exhausted?
I think it depends on NVIDIA earnings in part, and also tariff news. We may get some more partnerships. There's been, I think it was Basint alluded to that. If that's the case, I think that we can go quite a bit higher.
Yeah, I think so too. I think the Europe tariffs are like the main spotlight of what the market is looking at right now. So I do have good friends who sort of have their finger on the pulse, who do think that, or they're positioning their portfolio for us to have some type of a pullback. I don't think it's outside the question, but I think that, optimistically, we go higher from here, because what we've seen from the tariff conversation so far is that they've naturally resolved themselves. It's just a little bit of short-term pain, but I think over the long term, if you put the tariffs aside, we're going into a better position. I think the Fed is going to lower rates, but I've always been like a glass half full type of person, so I don't know.
And I do see, maybe I won't do a full thing on this, but CoreWeave, it's gone up a lot. Congratulations if you guys are shareholders. I think Nebius is a better play personally, with less risk. I like what they're building. I don't know if that's a long-term one for me. Right now, I'm actually leaning towards it just being a swing trade. But both I think are going to be good companies. It's just a question of valuation.
Yeah. And Sagi said, I feel like it very much is up to NVIDIA to decide where the market goes next. NVIDIA does have earnings after the bell tomorrow. And historically, NVIDIA has been, the canary in the coal mine somewhat on the market overall, or the sentiment of the market overall. So I don't disagree with that comment. Roy, real quick, before we hop off, what do you think NVIDIA is going to do tomorrow?
I think they're going to do very well. I think it's undervalued right here. I think it's probably going to move higher than the implied move as far as the options chain. But I'm not like betting it. I'm being very conservative with covered calls, very conservative. And some I just didn't even write. I just with chairs. I'm like, in case things go crazy. I don't know that will, but it's been 3 quarters. And I think since it's really had a huge move, and I think the market's frankly asleep on NVIDIA, which is weird, but that happens.
And if you want to hear more about NVIDIA, Roy is doing a podcast on his channel starting in 5 minutes talking about NVIDIA. Hit the like button and subscribe. Go grab yourself a little Celsius or a bottle of water or something, and then join on Roy's channel where he's talking about NVIDIA tonight. If you want my thoughts on NVIDIA, well, I think you're guaranteed 145 by end of week. That's because I have covered calls at 145 by end of week, so you're welcome for that. Thank you so much for watching Bootleg Weekly, and Roy and I will see you again next week. See ya.